Hello, everyone, and welcome back to yet another market outlook. So with what's happened this week between FTX, Alameda, Binance mentioning a takeover, we will deep dive into this story. We'll talk about the past, the present, and the future. We'll then take a look at SwissBorg during these black swan, so market crashing events, and how SwissBorg operates differently. And finally, stay tuned to the end of the video to hear something about SwissBorg's biggest tournament to date, which is giving away over $15,000 in cash in prizes. Most of you by now will have heard about what's happening with FTX, with Binance, with Alameda, but you might not have a clear picture. And that's why this week we wanted, of course, the focus to be on this story, to give you a full overview and to explain exactly what's happening. And therefore, we start by first focusing on the past, focusing on the bigger picture. So in 2017, Binance was founded, quickly became one of the biggest crypto exchanges in the world and one of the biggest names in the industry, really. In 2019, FTX was founded, and FTX, of course, had massive potential given their plan, given their vision, given really where they thought they could be and position themselves in the market. Binance saw this and decided in the Series A, so in the funding round, to invest in FTX. And this is something that we have to keep in mind that happened in the past, because it, of course, affects the current story at the moment in the present day. What happened after that is that in 2021, FTX then decided to do a Series B. So another series of, another funding round, another series. And in this investment round, actually, Binance decided to divest from its position with FTX. Now, there's two sides of this story. Binance and CZ, so the head of Binance, mentioned that this is a completely normal investment journey and a completely normal position to take, given a 2-year time frame where they've already invested. Whereas some speculate that they saw that FTX was becoming very big very quickly, so therefore a very big competitor to Binance, and perhaps this has something to do with the divestment. Nonetheless, this past scenario is very important to keep in mind when we look at the present. Now that we took a look at the past, let's look at the present situation and what's been going on. So the first thing to mention is the CoinDesk report that looked at Alameda's balance sheet. Now, for all of those of you that might be unaware, Alameda is the other half of FTX, meaning that FTX is the crypto exchange and Alameda is the trading arm, investment arm, also involved in venture capital. Alameda is crucial to FTX's business. It gives significant revenue through trading and market making and is really a large part of their business. Now, what this CoinDesk report showed is that almost $6 billion of the roughly $15 billion on Alameda's balance sheet are held in FTT, FTT being FTX's token. That means that over a third of their balance sheet was held in FTT. Why was this concerning? It's concerning because if FTX goes down and FTT loses its purpose, then Alameda in turn crashes. At the same time, Alameda was also using FTT to post collateral against its liabilities. That means that if FTT tanks, that could also mean that Alameda couldn't be able to cover its debts anymore. This shows just how interlinked FTX, their token FTT, and Alameda are, which of course they should be interlinked because Alameda being the trading arm of FTX and FTT being their native token, but not to the point where the majority of their balance sheet is tied into FTT, so their native token. That gives a very precarious situation and one that could implode at any given time. Now, what happened in turn? What happened is that CZ, the head of Binance, obviously discovered this data and potentially even more data that he didn't like. And he decided, following the divestment in 2021, to liquidate any of the remaining FTT that Binance was holding. In the tweet there also, he mentioned that it was a learning lesson from Luna, and that he didn't want any kind of crazy or chaotic scenario to happen. Now, following this report, following CZ's tweets and how those could be interpreted, of course, what this led to is mass panic. The market panicked. Anyone in the crypto industry pretty much panicked. What happened in turn is that following this news, the report and CZ's tweet, people ended up quickly selling their FTT, as well as wanting to withdraw from FTX, naturally, given the news that happened. Now, unfortunately, FTX was way too over-leveraged, had way too much leverage. They were not liquid enough, and so they couldn't cover all the withdrawals of their users and anyone wanting to withdraw from the platform. What this in turn leads to is panic ensues in the market. The entire industry drops. FTX token drops, starting, of course, with their FTT token, and in turn, the rest of the market pretty much collapses in the most chaotic and the most unclear situation possible. So this is the present situation. Certain data came out and certain reports and tweets came out that led to certain decisions and mass panic in the industry. And that begs the question, where does this lead us now? What is the situation at the moment? The final stage of this story is quite shocking, but it looks both at the present and the future, which is that CZ, head of Binance, has now decided to move to potentially acquire FTX. Now, nothing is set in stone here. Obviously, as was mentioned, due diligence still needs to be done, but already the fact that this kind of move is hypothesized, or at least the intention is for Binance to acquire FTX, is massive. So due diligence, first of all, will uncover whether there are other skeletons in the closet, whether there's other data or liabilities or uncertainties that Binance needs to take into account before making such a move, and even if this move will actually end up happening. But overall, the fact that this is even being hypothesized is enormous. It's in the traditional asset market, traditional industries, it's the equivalent to Apple buying Google or Meta buying Microsoft or any of these massive shifts from some of the top companies in the world. This is the case also if you look at any kind of research or any kind of data on the best and biggest exchanges in the world, whether that's by activity, by trading volume, or by assets held. However you want to look at it, Binance will always be clearly number one, followed by FTX somewhere in the top 5, sometimes top 10, mostly in the top 5. So it's really an industry-changing move and potentially one of the biggest pieces of news that the crypto industry has ever seen. It's unclear what this means if this does end up happening. It's unclear whether there are clear positives or clear negatives. The negatives also being referred to decentralization versus centralization, or just in general, positives could be a bit the safety and stability of the industry, although there would be one clear giant in the space. We will be following these news stories in the next days, weeks, months, however long it will take for this to be resolved. Overall, the fact that this is even being talked about and in such a quick succession to the uncovering of Alameda's balance sheet is astronomical, and it shows you the speed at which things happen in the crypto space. So stay tuned, and we'll see how this news unfolds. This current massive news story really always leads us back to the same place, which is, how is SwissBorg different? How has SwissBorg operated during crypto black swans, so during market crashes and during unrelated and quite shocking events that no one saw coming? So here I really want to share the sentiments of Nicolas, our CTO, Anthony, our CSO and co-founder, Cyrus, our CEO and co-founder, as well as Jeremy, our CFO, that all wrote very eloquently on Twitter and explained the situation perfectly as always, which is SwissBorg has no ties to FTX or Alameda. SwissBorg has no leverage. SwissBorg has no funds with lenders. All our user funds are segregated. That means they can't be touched, they can't be played with. All your funds will always be secure. The infrastructure that SwissBorg's created is ultra secure. The treasury management system has always been extremely diligent. And most importantly, our founders are founders with integrity. This means that we always have the user's best interests in mind. We don't play with money just to be able to give better returns, to give higher APYs, to potentially moon or skyrocket within a month or whatever. The focus is always on sustainability, reliability, security for our users and for everyone else. And this shows with what's happening with Celsius, what's happened with Voyager, what's happened with Luna, Terra, FTX, Alameda. All of these events happened this year, and SwissBorg remained pretty much untouched. That is because they do things differently. We really do things differently. And just to get a little bit of this story and a little bit of a sense of how SwissBorg is doing things differently, head to the Twitter, where there's a new blog post explaining SwissBorg the Survivor. Head to Twitter on Anthony, Nicola, Cyrus, or Jeremy's pages to read a little bit of what makes us different and what makes us so secure. And overall, try and compare us to the competitors. These things don't happen to SwissBorg, and there is a clear reason for that. To close off this week, I wanted to mention the new SwissBorg tournament. This is the biggest SwissBorg tournament that's being held to date. Over $15,000 in prizes will be given away. So for more information, please head to the SwissBorg Twitter, head to Crew3, participate in this tournament, and potentially you'll be one of the lucky winners. Good luck. That was all from me this week. Thank you very much for listening. I hope it's been informative as always, and I'll catch you all next week. Take care.